Welcome to this property and finance special with me, Gemma Forte. We're here today at the London Stock Exchange studios in the heart of the City of London for our monthly debate on issues related to property and finance. The clue is in the title. And with us today we have some of the country's leading professional industry experts who are invited to share their views unreservedly, I hope, on all subjects property and finance related. Now it's time for me to welcome to the London Stock Exchange studios our guests for today. We have Pirigesh Sivanesan, Paul Mahoney and Tony Gimple. Welcome gents, great to see you all here today. Thank you so much for coming in. So in today's programme we're going to be getting the views of our panellists on subjects which include the following: legislation against rogue landlords, or at least attempts to legislate, what happens when property investments go wrong, and how we can meet the moral requirement to provide social housing. Plus, crowdfunding. Is it right for property investors? Is it a fad, or is it here to stay? But first, as you may have seen, the Generation Game is back on TV. They will literally rehash anything now, won't they? But in the property industry, the Generation Game has never gone away. But how big a role does each generation have in shaping the world of property ownership? So, Pirigesh, I'm going to start with you on this one. What do you think?
I think the generation game has massively shifted. I think if we look at generations, let's break them down into kind of three units, if you like. There's those that aren't even thinking about ownership, so they're young children, maybe people at university.
Yeah.
And then there are those that used to be thinking about ownership from sort of 22 to your late 30s, and then there are those that are very much homeowners, let's call them the baby boomers if you like, that are kind of 45 onwards, you know, into retirement.
Yeah.
And I think each of those shape it differently. I think the thing that we've got to think about is generationally, how important is property ownership? In the UK, we're all obsessed, you know, we're all obsessed with property.
Yeah.
And, you know, it's very much a thing that everyone feels they have an absolute right to. But of course, in continental Europe and in other parts of the world, home ownership is not necessarily the absolute and the only way in which wealth is created. So for those that are young, what are the options open to them? Well, it's very much about savings. You know, the government have made certain steps to help people that are young, whether it's the kind of ISAs that are available in terms of savings. Specifically, they've created ISAs to help you for your deposit.
Okay.
And also, when we start looking at that middle unit, you know, the people who used to want to buy a house immediately, but now actually have to pay off their student loans. I heard an interesting statistic, which is that almost 2 million people would consider saving for a deposit by giving up healthy food.
Wow.
Which, you know, it's staggering in many ways, but it's...
So you'd have a house, but you might die of a heart attack.
Absolutely. It's an impression of how difficult...
How much it means to people. And I think you have really hit on something there. And it is incredibly unfair, if you like, that the younger generation are looking to how good previous generations had it. You know, you got a job pretty much for life, you got a pension. You know, it was kind of a given that if you worked hard, you would accelerate and, you know, up the ladder, and you would own your home. And that just isn't a possibility for people now. But that is going to be a shock, because we're not, you know, European in terms of how the Italians view owning and renting. It's much more common to never own your own property.
I think the other thing is it's not all rosy for those people that are homeowners, because actually they're the guys with all the assets. And I think one of the really interesting things is that people used to look at the bank of mum and dad, but of course it's become incredibly institutionalized now. So whether you go to Barclays or Post Office or any of these types of lenders, they've all got products now which actually rely on bank of mum and dad. So you send your son off to get a mortgage, or son or daughter in fact, to go and get a mortgage. They come back and say, I've been accepted, but by the way, I now need a guarantee. And that places a huge pressure.
And then do you get checked out to be that guarantor?
Absolutely, you would still need to be checked out, but also, a lot of these baby boomers are looking at reducing pensions, and they're also in an environment where it's not so much about the asset wealth. They've now got to make that liquid. They've got to somehow get cash in order to pay for their old age and in sickness. So
Yeah.
I think there are issues with property across the piece for everyone. I think that lenders and government are trying their best. We're getting mortgages. If you're young at 25, you can get mortgages at 35, 40 years now. You know, that's an attempt by the financial institutions to make it more affordable. The governments are putting Help to Buy in to help, again, people to get on the property ladder. And that's without even talking about real property wealth, which is beyond your first home. So I think there's a lot to debate here.
Yeah.
There's also a shift in preference, which is almost in contrast to that idea of it being so important to own, is that, you know, generally the younger generation now, they don't want to live out in the villages and the towns without the facilities, amenities, infrastructure. They want to live centrally. With the bars, restaurants, cafes at their fingertips, and also employment at their fingertips, not really wanting to travel to work anymore. And that obviously makes things even more difficult because you're going to more expensive areas where, you know, property is more limited. I suppose it's kind of typical of millennials almost, you know, kind of wanting everything at once. But something that is causing is a term I heard the other day was rent vesters. More and more people are continuing to rent where they're comfortable to live, especially so in London, and investing in property in areas where they can afford to invest and where yields might be higher. So they're still wanting to utilise their money for the purpose of property. But, you know, they can't afford the £1 million 2-bed in central London where they want to live. But they can afford the 2-bedroom flat in Manchester for 200 grand, for example.
Right.
So there's a lot of that happening at the moment as well.
And that makes sense because, I mean, as you say, sometimes the millennials, I feel, get a bit of an unfair bashing because actually looking at the difference between when I was, you know, younger and you could put a very small deposit down and afford a flat. I don't think anybody wants to travel sort of 3 hours to go to work and sort of, you know, be young and live in a sort of retirement village. You know, it kind of is difficult. And I think it's changed things culturally to the point of attitudes completely, which is why now they say that generation would prefer to put their money into experiences, into kind of the now, the travelling, because they just see it as I could save and save and save and save, and I'm still not going to have a deposit in 5 years' time. It's hard.
But there is an unexpected outcome with Bank of Mum and Dad. Parents are passing down their money during their lives as opposed to waiting...
Rather than when they die,
Correct. So that actually saves inheritance tax. And you get the warm, cuddly feeling of the kid saying, thank you, you've helped me on my way.
What are the rules around that, though? Because you can only give away so much, can you, as a gift?
Gifts from income, excess income, effectively you can give away as much as you like, as long as it doesn't affect your lifestyle and you can show a normal pattern of expenditure.
Don't get any ideas, kids.
If you're giving away capital, it's a different matter. There are seven-year rule, potential exempt transfers, a much more complex subject. But if you're giving out of income, which is how I help my son, it's inheritance tax friendly, gets him on the ladder. As long as he uses it well. But then
what's going to happen to the next generation? So yes, it's all right for the baby boomers who can sort of, you know, manipulate things a bit, try and find ways to free up the cash that they have got, etc., as you were talking about. But what it will be interesting to see what happens when the Bank of Mum and Dad have passed on. They've helped as much as they can, and then what? You know, I think something's going to have to change at some point.
I suppose the wealth has to trickle down at some point, doesn't it?
You
can't take you can't really take your money to your grave.
No. And out of interest, actually, because I know you split your time between Australia and London, what's the kind of culture like there?
Well, there's no inheritance tax in Australia.
Is there not?
So I think Australia has a slightly less attitude towards taxing the wealthy, as much as the UK does. So there's no inheritance tax. So you can pass away and pass on your assets and not be taxed on them.
Oh, okay, interesting.
I think
One last point, period.
I would just add that for the younger generation, they may just have to look at it differently. You know, when we look at the companies that have really come out of nowhere, whether it's Uber, that actually don't own any taxis, whether it's Airbnb, that are actually a big hotel chain but don't actually own any hotels.
Bitcoin, money that's
so
not money.
There may be ways of them to get exposure to property without necessarily buying whole properties, and that may be the way in which they actually end up owning a slice of property.
Yeah, and very interesting what you were saying about what was the term you used? Rent investors.
So people that continue to rent and then invest.
Yeah, no, I think that makes sense as well. Just being a little bit more open-minded about what you could do and a little bit more creative possibly.
Definitely an increasing trend.
Okay, gents, we need to move on now to our next subject, which is about property crowdfunding. Now, Paul, would you say this crowdfunding, which has really kind of hit the headlines in the last few years or so, is it a fad? Is it here to stay?
I'd say it's definitely here to stay. There is a very broad spectrum of crowdfunding out there. There are some of the bigger guys who seem to be doing it reasonably well. There is a lot of smaller sort of crowdfunding operations out there that I'd be very cautious of.
Interesting, yeah.
And there's also crowdfunding associated with a very broad range of different types of assets and activities.
Okay.
For example, you have the bigger guys, which are generally doing direct residential property ownership and letting them out on a buy-to-let basis. You know, the due diligence you'd want to be doing on that is actually understanding the asset they're buying. Obviously, these guys have a vested interest to make the things that they're buying look fantastic, because that's what they're selling. Although they're managing it on your behalf, unless they sell it to their, 100,000 investors, for example, it doesn't get funded.
Okay.
So you need to look a bit deeper and make sure you actually value the asset they're buying.
Yeah.
Some of them do it with cash. Some of them have now started doing it with leverage, which is really one of the major benefits of property investment in the first place. So you need to consider that.
And is this becoming so popular because of what we were talking about previously?
I suppose so.
An option.
On the basis that you can invest £50 or £100 into a £500,000 flat in London, I suppose part of it is that sort of nice feeling that you can actually now do that.
Yeah, you go, I own a brick. You see that big house, two bricks.
I suppose the concern is, what actual benefit is there going to be to that? Because obviously there's lots of fees and things involved in general. The ones that I've seen that I'd be concerned about is some crowdfunding operations that fund developments, and often to quite a high loan-to-value ratio, where the people involved have very little skin in the game. That's always a big concern.
Is it unregulated at the moment, as things stand? There's no regulatory body, so you can...
There is a requirement, unless you're doing it with just your friends, there is a requirement to be regulated.
Okay.
But so far as the oversight, once you are regulated, so far as the oversight on what you're actually doing with that crowdfunding, to be honest, I'm not completely au fait with it all, but from some of the things I've seen, it would be a little bit concerning.
Okay.
And what I'm talking about is when they're raising the vast majority of the money for a development, and therefore the people that are developing it have very little risk. It's the people that are investing that are taking the vast majority of the risk. That's where I think it becomes a bit of a concern.
Yeah, so do your research, basically, in terms of who you go with.
And maybe take a longer term view. Build to rent, particularly for social housing, long-term investment, long-term but very stable returns, is a way the property market is starting to go. There are incentives for it. So perhaps using crowdfunding for a stable investor, long-term social housing contracts, gives you the best of both worlds. Salve to the conscience and growth in the pocket.
Okay, yeah, because I think that is the thing that sort of would concern me, was exactly what you were describing before. So, yeah, it's an interesting thing, and you think it's here to stay as well, Puragesh?
I'm actually a big fan for a couple of reasons, really. Number one, equity crowdfunding. Paul was talking about kind of the use in development finance, for example. I think it's amazing, on one hand, that investors, it democratizes the whole thing, so they can be decision makers, which is good and bad.
Yeah.
But also, if you're an SME business, it's going to cost you a lot to be listed on the FTSE, where we're here. But if you still have the ability to raise equity, it's incredibly powerful for your business. So on one hand, I think it's a wonderful opportunity. Mistakes will be made. Banks have been around for 250 years, have made mistakes as recent as 2007. So, I think if you're an investor, you've got to look very carefully. A bad deal that's over-levered, like Paul says, is always going to be a bad deal, but it doesn't make the whole platform itself bad in of itself.
Absolutely.
So it's a little bit of a gamble.
Yeah, I absolutely agree with that. I suppose my point was, given that some potential bad deals are being offered to the general public that can invest 50 quid, who aren't sophisticated investors, that's never been the case before. So that unsophisticated investor, or for want of a better word, just needs to be a little bit careful.
Okie dokie, all right. Or maybe just put in as much as you would be prepared to lose. if that makes sense.
Capital is certainly at risk.
Yeah, don't put your life savings in without having investigated quite carefully. Thank you so much, gents. That's all we've got time for in this part of the programme. But do rejoin us after this short break when we'll be discussing rogue landlords and legislation aimed at flushing them out and what happens when property investments go wrong. So don't go anywhere. Welcome back to this property and finance special with me, Gemma Forte, and my guests who are Piragesh Sivanathan, Paul Mahoney and Tony Gimple. Okay, in this section we're going to be talking about the following. Rogue landlords exist, there's no getting away from it, and it is easy for tenants to taint all landlords with the same brush. But there are moves to, shall we say, eradicate the rogue ones. Tony, it's over to you. Now, I think this has come about, hasn't it, because of what the Mayor of Manchester, Andy Burnham, has been trying to achieve, which, you've already, like, I can see the three of you all grinning, but from an idealistic point of view, he's obviously trying to weed out those landlords who really are in the minority, but they do exploit people with unsanitary conditions, probably not fixing things when they go wrong, perhaps not smoke alarms, all the stuff that you would expect as basic rights. And he's trying to do this by forming an amnesty, isn't he? So these rogue landlords can come forward. Now that's a bit I think you're not fully sold on, in terms of how it will work.
I'm not fully sold on how not tenants but political parties keep using landlords as a convenient scapegoat.
Right.
And it's not just unsanitary conditions. It's also bad institutional landlords. Grenfell Tower.
That's as bad as it gets, isn't it?
That's a rogue landlord.
Absolutely illegal. And that was the council.
That was the council.
The richest borough in London, which was just the irony was so tragic.
The fact is, rogue landlords, deliberate rogue landlords, 20 to a room, exploiting people, trafficking, taking advantage of people being here perhaps illegally, but coming here because they want somewhere to live. They are not in the landlord sector, they're criminals.
Yes, and there is a distinction, isn't there? And you're absolutely right. There is a very big distinction to make between somebody like that, and I think that's what people immediately think about. Yeah, crowded rooms, just letting out to maybe perhaps illegal immigrants and people who are desperate, refugees even, and that is obviously got to stop. But you don't think this initiative is aimed at them?
No, it's not aimed at them.
Okay.
If it were aimed at true rogue landlords, more resources would be given to tackle. It
would be a police matter, wouldn't it?
It would be a police matter. Yeah.
Whereas what he is trying to do, and have I got it vaguely right, what he's trying to do is say in Manchester, right, for this period of time only, if you are a rogue landlord, which does seem to me is like anybody who is a rogue landlord is going to go, I'm a criminal, come forward, and then we will actually buy your properties from you?
Oh, and here's the rub. I think there was a comment about market value.
Market value. There's a question around whether he could be perceived as benefiting rogue landlords for paying market value, and the answer was, who said anything about market value?
Right.
Which, the whole thing is just a bit laughable.
I think Mark said something about market value.
So what when he's talking about a rogue landlord, who do you think he's talking about? People that are just not meeting basic requirements? Because there are laws in place, aren't there?
Yeah.
In terms of what you have to do. And I know that because my parents have a flat which they have always rented out, and they are like the nicest landlords in the world. Like, they're always driving over there to make sure everybody's happy. And the minute if, there's a dishwasher or something that went wrong, they instantly just buy a new one and liaise with the client to make sure they've got what they want. And it's not a big glamorous flat, but it's a nice little flat, and they keep it beautifully because it's ultimately their property. Now, I don't think, obviously we're not talking about them. So I have to think here he's trying to do something good, but maybe just in the wrong way?
No, he's trying to get elected.
Okay.
With a very well-funded political machine called Momentum behind him.
Right.
It all comes down to how many votes we can get at the next election, whether it's a blue tie, yellow tie, or a red tie. And people will use, politicians in particular, will use easy targets, visible targets, like landlords, to win votes and raise taxes.
So you're telling me that a politician is being self-serving in this country?
You can infer from that whatever you like.
I agree with Tony in a way. I definitely think he's using landlords as a soapbox. They are a very easy target. It's been done quite a lot recently by a range of politicians. I obviously also agree that the rogue landlord should be removed from the market, and what that refers to, I suppose, is subjective. Obviously, there's a range of regulations that landlords need to be meeting, and if they're not meeting them, they shouldn't be landlords. And that I think that needs to be better policed.
Yeah. I mean, as you say, I rented for a short time a few years ago, and it was for me and my 2 kids, and my landlord was disgraceful. She was a working woman. It was all right. I wasn't like living in absolutely terrible conditions, but there was damp in my daughter's bedroom. The shower stopped working for goodness knows how long. And I was phoning up the agent. It was a managed thing, and they just had to say, well, we have to ask for permission. We have to ask for permission. She's never answering. And I got to the point, I said, well, if it's manage it. Make the decision so we can have a shower.
Well, here's the other side of the coin. Licensing is actually a good thing for the sector.
Yeah.
It helps landlords professionalise, invest property, build good, decent accommodation where we as the tenant can feel safe in a secure environment. It will raise capital values, it will raise rents, it will make it easier to borrow money on, easier to expand. So the other side of the rogue landlord debate is to have fair, well-enforced licensing for HMOs, ASTs, so everybody knows they've got a level playing field in the market, and the people who are rogue landlords won't play that game, and they'll be much easier to pick off.
I think the other thing to add, to round it off in terms of the funding, is if you did have things like licensing, then the lenders would get behind it, and so what you'd actually have is, instead of government money, public money being used to reward in some ways rogue landlords, you actually have the reverse, which is funding is removed from rogue landlords, which is another way. So I think we can all agree no one likes rogue landlords, but I think in terms of a policy, it's slightly knee-jerk. It's meant in the right way. There are longer-term policies which I think, if implemented, be it licensing, be it requirements. I mean, here's one. Why not reward good landlords with being able to purchase rogue landlords' properties at significant below market? Now, I appreciate it's subjective, but that's a way to reward rather than instantly trying to have a...
It's very interesting, and I think in business that reward, not punish sort of system certainly works with small children. But no, I genuinely believe that there's more incentives for people who are doing good stuff and who are successful and good at what they do. That makes more sense than trying to punish all the time. Okay, so I think we're all agreed. Rogue landlords need to be get rid of, but this particular policy probably isn't going to be that effective.
No, and the reward side, again, is being abused, because you have very successful landlords who do provide homes for life as long as the rent being paid, battered to death by Section 24. We see people who are going to go out of business in 3 years as a direct result of those changes.
And of course, I mean, actually, with people not being able to buy their own homes, you need landlords, you need good landlords, because there's a huge proportion renting now.
Yeah, and that's back to what you said at the beginning, Pirish, there's this social change where people want to start renting as opposed to buying. And there are a lot of landlords out there who don't own their own homes.
Yeah, it will be interesting, like I say, to see what happens 20 years down the line, because it certainly seems like there's a huge shift. Okay, on to our next subject, which is when property investments go wrong. Now, in the UK, we usually consider property to be a very safe investment, and when we always say things like it's safe as houses, but sometimes things can go wrong, and knowing how to deal with those eventualities is crucial. Now, of course, you're all industry experts. I'm sure at some point you'll have experienced, which will add to your wealth of experience, a bit of a disaster. But when property investments go wrong, Paul, what are the most likely causes and how can you mitigate for those?
There's a whole range of things that can go wrong with property investment. I think you're quite right. Too many people just expect that you buy a property and you make loads of money and there's never any headaches, and that's just not the case whatsoever. I'd say that the most common reason that property investments go wrong is a lack of understanding.
Okay.
A lack of due diligence, a lack of understanding of who you're going to rent to, who you're going to sell to at some point in the future. And I suppose, as I say, literally going down, speaking to your estate agent, buying the property they tell you to, and then hoping it's going to be a good investment. Especially in the current market, that is just no longer the case. You can't do that. You need to understand not just the property and what's going to drive that as an investment, but all the rules and regulations that have changed so much recently.
Does it frustrate you professionally sometimes when you see sort of people that haven't got any experience in the property world whatsoever sort of jumping on what they think is going to be a really lucrative bandwagon and getting it wrong because they've maybe, you know, not appreciated what a difficult market it is?
The short answer is yes.
Yeah.
But that's simply a lack of education.
Okay.
You know, if you've got capital or can raise capital, want to make something of yourself, far be it from any of us to say that you shouldn't do it. If you are going to do it, have a plan, understand what it is you're trying to achieve, what you want from it. You know, tenants and toilets are hard work at 3 o'clock in the morning when your plumber won't come out, so you've got to be prepared. I think the biggest mistake people make when going into any investment, but probably property in particular, is failing to look at the worst case scenario. There may be nothing you can do about it when all goes wrong, particularly if it's not your fault, it's government policy. Or just changes in economic circumstances make it appear to go wrong. But at least understand, look at it first, and if you decide to do nothing about it, you've made a decision. But understand it, do your research, your due diligence.
Okay, fair enough. Piragesh, have you ever had any disasters that you've had to...
Not personally, but I mean, ultimately, I think it's about understanding cash flow. You know, that's really the main driver, because property is a long-term asset. It'll be here in 2 years, 10 years, 15 years. The main reason things go difficult is, for some reason, the mortgage payment is now harder to make than it was yesterday.
Okay.
So it's understanding the drivers around each of those. Also, if property was risk-free, the bank would give you the money at 1%, you know, inflation rate, basically. And the reason it charges a rate is because there is risk. I really don't mind novices entering the market. I mean, we all had to start somewhere. And I think, just like Tony said, you know, if you've got some capital, well, more for you, you know, in order to... Property is a great investment. It just needs to be done in the knowledge that there is cycles, you know, there is boom and bust, and you need to build a business that can kind of absorb those. So
you've mentioned two things that could go wrong as well. For you, new tax policies, new policies that you couldn't possibly have foreseen, and for you, the personal circumstances might change, and then you might not be able to meet the payments that you could. Both
of which lenders now have to take into account when making a judgment about your ability to repay a buy-to-let mortgage.
Right.
Just one more point on that. On the novice side of things, completely agree that novices need to and should get involved, but they should get advice and guidance when doing so and understand their skill set. Unfortunately, I think there are, dare I say, various TV shows that make these things look very easy. So far as buying, not this one obviously, buying, renovating, selling for a fortune. It's not that easy.
I think it was maybe 20 years ago.
It might have been more easier
You know,
before,
it was easier, you know, nothing was definite.
I suppose understanding that, you know, are you a property investor? Are you a developer? Because buying and renovating and selling is a development project. It's a big undertaking. So understanding what your skill set is, and therefore what your risk profile is, and then what's going to work best for you.
You're so right. And in fact, renovating a project is a massive undertaking. And fortunately, there are a few shows that kind of reveal that as well. And I think, oh my goodness, what have these people taken on? But no, it's very interesting. And I think this is why it's good to have these discussions. I think people should be tentative, shouldn't they? With regard to new policies coming in, how much warning do people get when things are about to change?
Depends what is about to change. If it's excise duty, midnight tonight. If it's tax policy, normally from the start of the new financial year. If it's a government leaving nothing in the cupboard, try not to vote for them for too many consecutive terms.
Yeah, okay, all right then.
Yeah, I think I would just add that, you know, we're in an incredibly competitive marketplace in terms of property, and often people can fall into the trap that just because legislation allows you to invest in something or a bank gives you the mortgage that you require, that it means that everything's safe, almost leaving the checks to somebody else. And actually it comes down to you as an individual. You know, you've got to understand what things work for you and what potentially can cause a hindrance.
Excellent advice, thank you very much. So proceed with caution. Okay, we have to draw this part of the programme to a gentle pause, gentlemen. But don't go away, because as soon as we get back, we'll be tackling the issues of social housing and at the other end of the spectrum, landlords versus legislation. Or perhaps it's vice versa. Don't go away. Welcome back to this finance and property special with me, Gemma Forte, and my guests today, who are Piragesh Sivanathan, Paul Mahoney and Tony Gimple. I almost did a little song there, didn't I? Anyway, we are now going to be talking about social housing. Piragesh, I'm going to start with you. Do you think enough is being done?
I think we can all agree, no, not enough's being done. I think the rhetoric and the politics of social housing mean that we've had lots of legislation which have been positive. We've had the Homeless Reduction Act. You know, no one can argue against something like that.
Yeah.
But we're still seeing homelessness increase.
I know.
And also it's the knock-on impact of that. So it's now the councils that have to deliver on that, and yet it appears as if they have less and less to work with. So although the politics seem to work, the actual execution in terms of genuinely putting more social housing out there is what's really failing. I think, you know, as someone in the private sector, what I would like to see is more of a debate as to how the private sector can help, but more importantly, a realization that if the private sector does get involved, yes, that dirty word profit may have to be made, but more importantly, actually we should celebrate the fact that the private sector can get involved. So in affordable housing, for example, we've seen large pension funds, investment companies actually come in and actually expand the amount of housing. We've seen bonds issued by housing associations backed by private money. These are the types of initiatives that I think we need to explore more, because if we just leave it at the politics, the sad thing is, you know, there's a 250% rise in the use of B&Bs for permanent housing. Yeah. I mean, you know, we can all agree that that's just heartbreaking.
I know.
We need a solution, for me, that solution can only be found by bridging private and public. And what I would finally add is, we have a number of landlords that actually provide social care type housing, but actually it's even a problem for funders. So some funders will shy away from providing funds to allow landlords to buy this stock because it's seen as vulnerable people. And the issue for lenders is that if they were to repossess a house with a vulnerable person, then it looks bad. But actually we've got to all kind of get beyond that a little bit.
And those
really
vulnerable people, surely that you know, it will be being paid for by the government.
Yeah, absolutely. But so that's why it makes sense in terms of the government actually willing to pay to support these people. But actually from a private perspective, unless you've just got cash, lenders are weary. I mean, there are some lenders out there, but it's how can we make this more accessible? Because
and you're right. If you need to sort of plunder resources, if the resources are people in the private sector, they're not going to do it just for love, are they? Probably. So they need to have an incentive, some kind of structure must be possible.
But then neither is government doing it for love. Call it a budget surplus, change surplus for profit, and you have exactly the same thing. Unless there's positive cash in the system, you can't invest in infrastructure and public works. And we say social housing, social landlords. Well, all landlords are social housing because they're putting roofs over people's heads. And we have almost the law of unintended consequences with having to do 6-month tenancies. Actually, you're not giving people a long-term roof over their heads.
No.
And most people who rent, they're in two classes. Short term, transient, you know, between places, between lives, you know, or for the long haul, somewhere to raise their kids.
Yeah.
And the private sector can get involved financially. Build to rent is a fantastic way of doing it. You know, looking for longer term contracts.
Yeah.
Working with local authorities to come up with the right deals for the right people. I think we looked at some rough numbers, and take one of the refugee schemes for instance, and that's a good bar. It operates in much the same way. Rents are about 3/4 of what you would get on the open market, but then the costs of setting up and running it are about 3/4 of what it would cost on the open market.
Okay.
So you're still making a profit.
Yeah.
Government has a surplus which it can reinvest, and we are all social landlords whilst maintaining, you know, businesses' ability to generate social mobility. And as long as people don't pull the ladder up behind them afterwards, actually it pretty much works.
Yeah, there does have to be something done.
Yeah, I'm a massive believer in profitable philanthropy. I don't think anything else really works, because otherwise you're just throwing money away. People get greedy with the money they're given. They don't use it in the right way. I think that's a good expression. Positive philanthropy. That makes sense. Yeah,
and it encourages more people to get involved as well.
Exactly. And although, you know, landlords are viewed in a negative light for some silly, strange reason, incentivising landlords to provide this social housing shortfall that there is seems to me just so logical. It would be probably an unpopular policy. Because it would be viewed by the masses as rewarding landlords for, but for providing a good service.
I don't know. I think of the outcome. I think people are intelligent, and if that is, I'm using my business to do something that's socially helpful. And this Christmas, and then of course in March we had the really horrific weather, and you do notice that the homeless situation is out of hand. And I don't give out to everybody, but when I do, I'd usually stop and have a chat. And the circumstances that you hear, people that I met one guy who just sort of split up with his wife. She'd kicked him out. He didn't have an address. Things go from bad to worse. So eloquent, desperate to get an address so he can get a job, and you just think, if he could just get that address, and he just, it's all I want to do. I want to sort of turn everything around. I totally believed him. There's got to be some more solutions, absolutely.
I think finally, just to go back to policy, the other thing we haven't really talked about is universal credit. That's obviously coming in, and there is a view about bringing it in line with average wages, so from whatever it is, 24, 27 grand down to 18. I understand the logic of it, but now what? How are these people going to be housed when in a situation where you're actually withdrawing their income? And the other thing around policy is probably planning. For developers, certainly, if you incentivize them and make the process easier, that's an opportunity. And the other thing is technology. Modular construction is around now, and that can bring the costs down. I think if you give the opportunity for the entrepreneurs, they will create stock. We've just got to be given an opportunity, I think.
Excellent. Okay, our final topic for today is legislation and landlords overcoming the legislators. Can private landlords fight the legislation that threatens to put them out of business? It's very relevant to everything that we've been talking about today. Tony, should we start with you?
Should they fight it? They should certainly make their views known. We have a parliamentary democracy. Thank you, Cromwell. One of the few good things he did. But if you believe in something, something being done to you is unfair, you have an absolute right and obligation to push back. Not all legislation is bad. We need a degree of framework and consistency in which to work. Was Section 24 a bad thing? Yes.
Yeah. Now, for anyone who's watching that doesn't specifically know about Section 24, would you mind just doing us the honour of explaining?
It is the capping of tax relief you can get on mortgage borrowings. Effectively, it means it's capped at whatever the basic rate is. You only get 20% relief against your mortgage interest costs, which is crazy because given that the vast majority of landlords are operating as a business, in fact, they totally meet HMRC's definition of what is a business. You wouldn't punish businesses in any other way, but landlords are a visible target.
And has that been so detrimental that it has actually gone as far as putting people out of business altogether?
Yeah,
Really?
Yeah.
Okay.
Yeah, and we're seeing more and more of it.
Certain people, I think it's very important to clarify this because a lot of the discussions we've had so far, I think, has been quite negative, and that could lead people to believe that property investment is no longer a viable option, which it most certainly is. In the right circumstances. And Tony's quite right. For that certain type of person that followed a certain strategy, they could be put out of business by this change. But there are a range of ways of dealing with it and to still operate a profitable property investment business. So I suppose it's just, I just wanted to clarify that.
And I think that's really worth saying.
No, it's not.
Because it's very easy to say that all the recent changes have been, and if you read them, if you read the papers, you probably think the same.
You're all still standing.
Absolutely. But sadly, because implementation, the compliance has been such a blunt instrument, you've got people who, one chap we spoke with, and this will give you a clue as to how long he's been in the market. He has 100% DSS, Department of Social Security tenants, a long time before Universal Credit, and his social compact with them was: you pay your rent, I will give you a well-maintained, regularly decorated, and fit to live home for life. As a direct result of Section 24, in 3 years' time, he will be bankrupt.
So that's ridiculous.
See, that is ridiculous. It's punishing the people that they're trying to,
Correct. But this is the problem when you have dogma over logic. And sadly, we have an adversarial democracy.
Yeah.
And then dogma rules okay.
So that person goes out of business, and then they'll do a huge campaign trying to find people like him.
Correct.
Yes. Bureaucracy, eh?
Yeah, I think just to add, first of all, a number of property entrepreneurs will find ways. There are a number of strategies in order to succeed. Yep. We've talked quite heavily about residential property investment, but there's also commercial property investment. There's development. There's lots of different strategies that can be used.
Yeah.
And also to be topical and to use business. Quite clearly, Sainsbury's felt the need to merge with Asda, which has kind of blown a lot of people away. But it's a kind of out-of-the-box thinking that they've had to do in order to be relevant in their marketplace. So the marketplace will continue to change. We will have changes of government. We will have different legislations. I absolutely agree with Tony that landlords should come together and have a united voice. I think that's something that's sometimes been missing, and I think that's crucial. But let's not forget, this is ultimately a business, and in order to be profitable, they may have to change. It's looking outside of the box, and it's working out different, maybe we're going to start to see a bit of M&A activity, even within the property sector, in order to gain different types of interest or diversifications. So these are the types of things that actually we should still consider. The property investor's never going to die out. It's just a question about what they look like.
Okay, yes, and going back to your sort of positive note, which I think is so important, is there anything you'd like to add in terms of advice for people who are looking to...
I think that's a really interesting point that was raised there so far as changes in strategy. And perhaps, to be honest, I've never thought about it that way, but landlords have had it the same way for so long. And the same strategy has almost worked for, 20, 30 years, and now things have changed, and in some cases the toys are being thrown out of the pram. But that's obviously not the best way of dealing with it. There are a range of ways of dealing with these changes and changing the strategy to the current market.
So being pragmatic.
Yeah.
Absolutely. The property market's been here since feudal times and before. You've got landowners and tenants. And it's just evolved onto a smaller and smaller and smaller scale, so we've got individual ownership, our own plot of land, an acre, the amount you can plough in one day and support yourself. Well, actually, we're out of Europe now, aren't we? So I can use imperial measure. So the market is
not
changed.
yet.
Well, near enough. It's over. Get over it, guys. We're out.
No need to ask what you voted.
And that's despite coming from immigrant stock, second generation. Okay, it's still best. By the by, the market is changing, but it is yet an example of being another business. And treat it like any other business. Be it property, be it equities, be it television, be it the corner shop, you have to make the same decisions. Will I get a return on my capital? Will it generate me income? Can I maximise the commercial benefits for doing so? And how flexible can I be when the market changes the next time? Because it will.
There you go, things change. Well, on that philosophical note, I'm afraid that is all we've got time for today. But please join us next time when our industry experts will be sharing their views, tackling other topics within the world of property and finance. So from my guests, I'd just like to say thank you so much to Purigesh, Paul and Tony. Thank you very much, gents. And from me, Gemma Forte, I'll see you next time.